Hi everyone, good morning and welcome to the first morning report chart appraisal of 2016, Monday the 4th of January with me, Richard Perry, market analyst at Hantec Markets. And what a morning we're having already. First trading day of the year and the markets have gone pretty hectic again. Issues over China, the PMI data from China disappointed again. That certainly had a big impact on risk appetite through the Asian trading session. Also, we have diplomatic tensions rising between Saudi Arabia and Iran, and that is certainly having an impact across commodity prices as well. So basically, we're seeing significant downside on equity markets, big choppy moves um, on forex plays, and safe haven trading across the board doing well. Now, just to show you initially the dollar. We've had the euro strengthening against the dollar, so that's trade weighted dollar sharply lower. But the interesting moves we're seeing, generally speaking, is in the oil price. Really big sort of issues between the sort of trade-off between demand and supply side. You've got the supply side where um, the issues in the Middle East between Saudi Arabia could impact on supplies. But the demand side is still very weak with China PMI disappointing. So big sort of pulling around, toing and froing on the oil price today. It was initially sharply higher and then back lower again now. So really uncertainty as to exactly how this oil price is going to play out. But we have, as I've drawn in here, broken out from that downtrend channel, and it actually is in the process of possibly even having a base pattern, but at the moment it's back lower again, so still yet to be completed. Look at these safe haven trades. The US 10-year Treasury yield sharply lower. That suggests a move into safe haven plays. You've got the gold price strongly higher today, and also the yen performing very well as additionally as well. So lots going on to drive these markets today, and it certainly isn't a quiet start to the year. So, what else have we got to look forward to today? Well, as I said, we've got the PMI data for China. Well, we've got the Europeans out now. The Eurozone data has been pretty solid, actually, pretty decent, and we're now looking towards the UK manufacturing PMI. That's expected to come out at 9:30 at 52.7, so in line with last month. And then into the afternoon, we've got the US ISM manufacturing data. Now we had the Chicago PMI, which disappointed significantly to the downside on the final trading day of the year on Thursday, and the expectation is for the ISM data just to pick up slightly to 49, but still remain below 50. So that would be again a concern that the US manufacturing industry is not doing all that well. Now, the only other bit of data we've got today is the German inflation data. CPI German for Germany is released throughout the morning through the regions, and the final countrywide data is announced at 1 o'clock this afternoon, and that's expected to come in at plus 0.6%. So that would be a third month in a row of improving inflation data there. So that could be supportive again for the euro. So that takes me to my chart of the day, which is the Kiwi dollar. Now, we've had strong moves, as I said, on these commodities, and strong moves on the commodity currencies as well. The Kiwi dollar sharply weaker today, and that is now broken down from this big uptrend channel that it's been in for the past six or 7 weeks. And that is a strong move. That is a big breakdown. You've seen the RSI back at 50, which is the lowest in 5 weeks. Which is, I think, if it starts to move below 50, that would be seriously a concern. You've got the stochastics giving another corrective signal. Certainly, again, if the stochastics fall below the sort of 60 area, which was the sort of reaction lows it had through the uptrend channel, that would again be certainly a corrective signal. The big support comes in 66.83, which is this sort of 17th of December reaction low. So we've had the selling pressure starting to break down that, or certainly having broken down that uptrend channel. That uptrend channel could now become the basis of resistance on the upside. So it looks as though the correction is beginning to take hold again. So on the hourly chart, you can see this breakdown of the initial support being broken. So that initial support also becomes a basis of resistance, which comes in around about the sort of 68 10, 68.20 marker as well. So if you look here on the daily chart, again that would be basically in line with the old underside of that uptrend channel. So if you did see a bit of a rebound on Kiwi as this move starts to unwind, I'd expect that sort of area to start to be where the resistance comes back in again. So we could still see a bit of a correction here coming through. Look at also the 21-day moving average, which had been used as a basis of support throughout the upside of the trend channel. That has now been broken to the downside. So all these signals are beginning to suggest a bit of a turnaround once again in the Kiwi, and perhaps the beginning of a next correction lower as this risk appetite across the markets continues to deteriorate. So I wish you good luck in your trading on the Kiwi dollar today, and I will speak to you later. Thank you.